Hi there, everyone. This is Codie Sanchez, and I'm with Entourage Effect Capital. Thank you so much for joining us today here at the Arcview group. We're thrilled to have you. This has become a little bit of a case of us being in your living room every single week, which I love, so thanks for joining us. We happen to be an expert in the distress space at Entourage Effect Capital, so I was super excited to be able to give a little bit of an intro here because I think there are some wild things happening in the world in general, and most certainly in cannabis. If you're new to Arcview and you don't know this crew, then let me tell you, they're the largest group of high net worth investors in cannabis. The goal here at Arcview is manyfold, but to bring you everything you need to invest in this industry and partake in, what many of us think is the newest emerging market that just may lead to a generational wealth creation event. The goal is that we do this in a way that's strategic and with your eyes wide open. This industry, as I like to say, demands a lot of respect. So before you start putting your dollars to work, we hope to give you the intel you need to do it intelligently. So as you might know, I usually have a weekly rant. My rant this week is that I think there's a couple lies floating around in this wide world, specifically regarding cannabis and our economy. And so I want to talk to you about the two big lies I see and the state of the cannabis industry. But before I tell you that, I have to say thank you. A thank you to our sponsor, the Entourage Group, which is a self-directed retirement group. You'll hear more about this. Bill Neville, the business development manager, will join us later for Q&A, and they're running an offer for the Arcview network to save $50 off your establishment fee with the code BN50. So stick around, they're going to talk to you more about that. Okay, back to the lies. So Mark Twain has a great quote where he says that there are three kinds of lies: lies, damned lies, can I cuss on here, Kim, and statistics. And I think that's a perfect way to start a conversation where I inundate you with some numbers, predictions, and my take on the economy. Because remember, our goal as investors is we have to question everything to get to the truth. So these are sort of my big non-consensus opinions. First, let's talk about cannabis. If you weren't on with us last week, I'm going to share my screen with you, or I think this would have been 2 weeks ago. There was a great slide that they put up at Arcview that you might not have seen before. It looks like this. You should be able to see it right in front of your face. It said, Wall Street throws in the towel. And it basically compares the 99 tech bubble to cannabis in 2019. And what you'll see is that the cannabis industry has had a 70 to 90% valuation reset. We're talking about an evisceration of wealth during the last year. What you also may see is that we're not entirely done. And that's my one prediction today. I don't think that we are done with the cannabis market reset. That is why I think it's so important that you're listening today, because over the next few months, we are going to see more of what we've already started to see, which is companies delisting, companies taking aggressive loan terms. We were talking about a few previously. M&A due to need, not desire, and distressed players coming in and scooping up a ton of valuable assets to an asset class that is growing at double to triple-digit revenue year over year. So despite being worried about the cannabis industry and us having some time to play in this distressed landscape as investors, I want to talk about the fact that we are not going off a cliff economically. And this is something that I think is important because people are paused right now. They're not putting money to work quite yet. And I think this is a mistake. And over the next 12 to 24 months, you're going to wish that you had invested strategically, of course, in industries that have a couple of different characteristics, such as essential services, positive revenue, and a path to profitability, aka cannabis. Here's the two lies. One, lots of people out there talking about recession or Great Depression. Everybody's sort of worrying about what's going to happen, with the Fed. We have the Fed, this week, the Fed president, Powell is, obviously in front of Congress testifying. But you got to remember, the Great Depression happened because the government didn't do stimulus. If you look back, they were actually incredibly slow to respond and hiked interest rates, as opposed to put what our government is doing, which is $3 trillion or 15% of GDP into the economy. Pair that with the fact that the Fed pres has said, we're not even thinking about raising rates. We're going to have loose monetary policy for a while, which means that we will have an opportunity as investors to keep putting money to work. Interesting part to keep note of, $4.7 trillion of cash sitting on the sidelines. That money is going to go into deals like distressed and low valued asset classes. Second point, V-shaped recovery. I said, back before COVID-19 that I think that we were going to have a V-shaped recovery after COVID had sort of stopped the economic pause. And the data is showing that we are already amidst that. Do I think that we're going to get to pre-COVID-19 levels quickly and that this had no effect on our economy? Not at all. We have millions unemployed. This is a massive, massive shutdown. However, we have unemployment down to 13% from 20. We have, initial jobless claims are up 12%, which means people are earning more money. These are all signals paired with all-time, or not all-time, but all-time during COVID high retail sales growth that the economy is rebounding. So as investors, I hope that you sit and listen today about the opportunity to invest in small businesses during this business crisis, in diversifying your bets in those business across multiple companies, and in essential services who continue to have revenue despite all the uncertainty surrounding COVID-19. Moral of the story, the world's actually a little bit better than you think. Despite the noise and the news, there's still an opportunity to capitalize on it. All right, enough of my rant there. Let me get to the introductions. All right, first we have Tom Zuber. Tom is the founder and managing partner of Zuber Lawler. Tom is a relationship partner for some 10 Fortune 500 company clients of the firm, as well as funds and government entities. He also represents leading cannabis companies for over 12 years. Zuber Lawler as a firm manages the highest stakes matters of a large percentage of the biggest brands in global cannabis. And Tom is actually also a founder of the international cannabis consulting company Global Go. He earned a JD degree from Columbia Law and a master's in public policy from Harvard, so he's not intelligent at all, and a biomedical engineering degree from Rutgers University, where he graduated with the highest honors. Of course you did, Tom. I've known Tom for a while, so maybe I can give him a hard time. Tiffany Liff. Tiffany is someone near and dear to my heart. She is responsible for New Deal underwriting and portfolio management at EEC. She has over 20 years of leverage finance and M&A experience. She's closed billions in distressed syndicated loans for private equity firms, real estate, and cannabis investors. She's responsible for us for originating, underwriting, syndicating, and closing some of the largest leveraged loans in the market in cannabis and at varying points in other industry. She's a founding partner specializing in investing in real estate and cannabis on behalf of many different entities. She also knows this industry inside and out, which is unique for distressed players. Then we've got Hershel Gerson. Hershel is CEO and managing director of ELLO Capital, a boutique investment banking and M&A advisory firm that's all about cannabis and related industries impacted by the rise of cannabis. He has over 15 years of success in investment banking, M&A, and private equity. His ability to advise across a broad range of strategic matters, including, well, let's rattle these off, leveraged finance, M&A, IPOs, private placements, among other things, has him uniquely positioned for this conversation today. He has previous deal experience across industry verticals that include a few sectors that touch cannabis, such as retail and consumer, TMT, energy, real estate, and healthcare. So direct all the tough questions to Hershel. Introduce also our sponsor, the Entrust Group, provides a CC account administration services for self-directed retirement accounts and tax advantage plans. They assist you in purchasing alternative investments within your retirement funds. It's pretty cool if you've never actually seen this happen, and administer the buying and selling of assets that are typically unavailable through banks and brokerage firms, so things besides commingled funds. So with that, let me hand it over to Tom and change my mug for his face. Tom, are you ready?
Yes, I am. Thank you, Codie. Pleasure, everyone. Hello. I'd like to thank, first of all, Codie. Great to see you, Codie, and thank you very much for the warm introduction. Also would like to thank Arcview Group, Kim Kovacs, and our friends at Arcview Group. So wonderful to have this relationship with such leaders in the space doing such wonderful things, including educating investors on how to responsibly enter the cannabis industry. I'd like to go ahead and just get started here. First of all, Tiffany and Hershel, it's great to be doing this panel with you. I'm an admirer of your biographies, your achievements in the space, and I'm awfully interested in your answers to these questions. So why don't we go ahead and get to it. My first question is for Tiffany, but these questions are open for our panel. Tiffany, how are you seeing current events affecting valuations in the cannabis industry? And by current events, of course, we're affected not only by the challenges facing the cannabis industry in general, but also obviously COVID-19, and then more recently, the horrible circumstances involving George Floyd and the way that that's affected the economy and society itself. So again, how are you seeing these current events affecting valuations in the cannabis industry?
So I still think the fundamental issues of why the cannabis space had a severe correction, second and third quarter of 2019 still exist today. There's not capital flowing into the space currently. The companies are not able to take advantage of leverage. The projections that a lot of these companies put forth in 2018 and 19 did not come to fruition, which is why we saw some of the correction take place. And I don't see that changing right now or anytime soon. So from a valuation perspective, I think, the gods smiled a little bit on the cannabis space with allowing us to stay as an essential business during the COVID situation. So it allowed companies to remain in business and to grow a little bit from a revenue perspective. I think it also highlighted a lot of issues with the space from a national legalization perspective. I think between COVID and the George Floyd issues that we are going to see a lot of the legislature look favorably upon the cannabis space in order to continue to make strides towards national legalization through this process. So I think that was a little bit of a boon for the cannabis space in general, but as far as a valuation perspective, I still see valuations depressed, and they will continue to be depressed until we allow national legalization or a state's rights or legislation that would allow institutional capital to flow into the space.
Thank you, Tiffany. Do you have a notion on when the end of prohibition might occur? And you may not, but I'll take a swing at that, particularly in light of the pending presidential election.
No, my crystal ball is broken at this point, but I do believe that that this has put us on a national forefront, what's happening through COVID. And I do believe that we are going to get legislative attention through this. So I do think that we will see some sort of movement sooner rather than later.
Very good. Hershel, my next question is for you. Is now the time to do a down round? And of course, that answer could take any number of forms without further context. So let me be a little bit more specific. If you're a cannabis company, you're struggling, but you have the runway to hold out to the end of the year, should you consider trying to sell or should you hold strong?
Yeah, thanks, Tom. Before I get started, I do want to thank Arcview, Tiffany, Codie, and Tom for you having me today. I generally, I came into the industry a little later. I came into the industry in July, right at the precept of the, what I'll call the Great Cannabis Reset. So I may have a little bit different perspective. I think the industry was, I think overvalued, and where we are today is more fundamental to where the industry should be. Still very healthy multiples. U.S. MSOs are trading at about 2.5 times revenue, and the large Canadian LPs, trade around 5 or 6, given that there's federal legalities in that market. But I think everybody needs to understand the Canadian market today, the whole Canadian market is less than California. So it's just not a big market, and they're not playing in a market size to which the projections really made that much sense. So fundamentally, I think today they trade probably at a better point relative to their market, given that a lot of them can't come down into the U.S. given where they're listed on their exchanges. As far as capital and doing a down round, my view is if you need the money, there's a saying out there, if you're looking at death, you should take the fever. So unfortunately, the reality is we have depressed valuations. There's a new level of expectation. And if you didn't grow revenue that supported your early valuation, for all intents and purposes, you need the funding, you should take the money. But if you are able to, you're cash flow positive and you're looking at either a down round or, tightening the belt and maintaining the operations, I would probably tell you to tighten the belt, maintain the operations, and continue to go being cash flow positive. I think the investment dollars are starting to thaw. I think people are looking at COVID and seeing the market rebound. We have proven cannabis to be defensive. There's a lot of quality attributes, I believe, in cannabis related to the fundamental trends related to legislation and embedded growth that still maintains today. The valuations are, at a very palatable place. So I think it's a very strong place to put money in today. Unfortunately, a lot of investors who previously got in, whether it be the Canadian retail investor or some funds, are taking some losses. So there's some hesitancy on that side. But for a new investor to come into the market, I think it's a very attractive time. And to the extent that people companies are cash flow positive, we heard that there's a low to zero interest rate environment in the traditional industries. Today, cannabis gives high single digits to double digit yields. So it's a very attractive market, defensive, a lot of embedded growth, and giving investors the opportunity for yield. So, we see this time as being a very favorable time to start deploying capital.
Very good. You had said something, Hershel, and I want to follow up on it. Noticing the discrepancy between valuations here in the United States as a multiple of revenues compared to the valuations in Canada as a multiple of revenues. And that's quite a discrepancy, maybe a 2x discrepancy, right? So on that note, a question we often hear is, are cannabis companies overvalued? That's a popular question. I've asked that question many times, and that's a good, healthy question. But I'm going to ask a different question in light of your statement. I'm reminded of the quote, "This too shall pass," and that refers to good things and it refers to bad things. And so I'm often surprised at the lack of coherency and the lack of logic in terms of the movement of stock markets, including in respect to cannabis. So on that note, are certain cannabis assets in the United States, are they undervalued as a function of your statement? In other words, if you do believe, as I do, as I think probably most of our audience believes, that prohibition will end and furthermore may end sometime relatively soon, then doesn't that speak to a notion that that discrepancy is probably to some set a function of illogic and not embracing the notion that this too shall pass, including these hard times facing the current U.S. industry? So that's a question for you, but also perhaps for Tiffany.
Yeah, look, I think you need federal legalization to get the incremental uplift that the Canadian LPs today trade at. I think that's, and nobody has the crystal ball, as Tiffany mentioned, related to when that's going to happen. I think that there's a lot of tailwinds today related to getting that happen sooner than later. One, states are looking at coffers that are dry. They need the revenues for their states, and cannabis provides, significant revenues in California since its inception. About $1 billion has come in. States are going to need employment. Today, cannabis employs more people in Illinois than the meatpacking industry, and more people in Nevada than the bartending industry. So it's now having significant impact on these state economies, from not only from the sales tax, excise tax perspective, but employment taxes and income taxes. And then lastly, now we have social justice. So, one of the areas I expect Biden to get pushed on is related to his criminal, his sponsor of the criminal act bills earlier in his career. I think to make up for that, he's going to have to come out a little bit more positive on cannabis and the incarceration rates associated with cannabis. We all know the participation rate within cannabis is similar regardless of your socioeconomic level. However, Hispanics and African Americans have 4 times the incarceration rate. So that's a injustice that needs to be corrected, and we think the positive legislation it needs, that needs to happen. And with that, there's 2 ways they could do it. One, states' rights or federal legality, or 280E relief. So we didn't talk a lot about it, but right now the federal tax regime is super onerous on cannabis companies. And, descheduling cannabis to a Schedule 3 drug will alleviate a lot of that and provide more cash. So that will also help multiples. So not only do we have a federal legality issue, we also have a very onerous tax regime that's causing pressure on cash flows in U.S. markets.
Yeah, I don't disagree. I also think the social equity piece is going to be pivotal over the next year. It is extremely expensive to start a cannabis business, and there's not capital flowing into the space. So I think we are going to have severe reform on the taxation side, severe reform on the legislative side, even if you're not talking about national legalization, just in general with each state. I mean, the levels of that you have to navigate and the cost to navigate those levels just to apply for a license and to open a business, particularly in the state of California, is prohibitive to most people that would benefit from any type of social equity. So those laws are going to have to change severely and open up in order for us to see movement on that front. And particularly just to touch on the down round that, that Hershel spoke about, I don't think that, in this space, that's not as much of a scarlet letter as it is in other sectors. I mean, if you raised money in 2018 or early 2019 and you are going back to the market to raise money, last quarter or in 2020, you are going to have to do a down round. I mean, there's just, I haven't seen one company that probably needs capital at this point that wouldn't be contemplating some sort of down round that raised in the heydays of cannabis. So I don't think that's as much of a knock on the companies as it was just the exuberance of the space and the investors at the time.
Thank you, Tiffany, and thank you, Hershel. Great insight there from both of you. So one of the things I've been excited about on this about this panel is the fact that we have 2 different perspectives represented so fully, so well. So Hershel, obviously, you're a very well-known figure, a very accomplished figure representing the companies themselves, let's say the distressed assets themselves. And Tiffany, of course, you represent the ones that swoop in and scoop up these distressed assets. So I find that to be a wonderful set of perspectives to have on this particular topic. So Tiffany, I'm going to ask you the flip side of the question that I asked Hershel earlier. Looking to the VC side of the equation, is now the right time to go all in purchasing distressed assets, or do you think that things will get worse, that opportunities will get better moving forward from the vulture perspective, and therefore should you be more hesitant now? Now, obviously, of course, if you see something that's a particularly shiny object and it's a good investment, then you're going to swoop it up. So I'm not asking about in absolute terms, I'm asking about the pace of things. Are you ready to go all in now? Is this about as good as it's going to get, or are you sort of pacing yourself and anticipating that things are going to look even more favorable from the VC perspective?
Yeah, I think we're on the latter end of what you're speaking of. Some of the assets that are for sale right now, particularly from some of the larger MSOs, are being actively pursued and aggressively by multiple parties, and that's driving up the cost of those assets at this point. So while I do think there are some individual assets that are attractive at this point in certain markets, I do believe in general that we are pacing ourselves for things to come in the second half of this year and the first quarter of 2021. Very
good. For the record, we're seeing the same thing on the part of our clients. There's an interest now, and there's a looking around now, but people are waiting for another shoe to drop. So
yeah, I think everyone's super excited about there being the ability to pick up distressed assets right now, and that's driving the exuberance, kind of like it did in 2018 when everyone, kind of drove up the valuations for companies, that didn't have fundamentals to support those valuations.
Right. Hershel, were you going to add something?
Yeah, look, I was just going to add that I think if you're going to invest in a distressed asset, you want to make sure you have an operating team that can execute. I think a lot of some of the distress in the industry was a result of potentially people like myself and Tiffany becoming operators in an industry that we saw a lot of opportunity, but we're not. I could talk a lot about operations and what I think needs to be done. Customer loyalty program. I think every retailer needs one, but I don't know the first thing about putting one in place. So you really need operators to experienced operators in the space to take these assets and really manage them effectively, and that's challenging. I think between Tiffany and I don't know where she sits on it, but I think single state operators, making sure you get economies of scale in a single state is very important. I also think very strongly about vertical integration. I think the supply chain really isn't there to be dependable and consistent for parties without really controlling it. So that requires a lot of discipline within the management team, everything from ag, manufacturing, retail, merchandising. That really doesn't exist in any other industry or any other part of CPG or retail. Generally, we segment out those disciplines, and there's companies that operate specifically in ag or specifically in manufacturing, specifically in retail. It's just really hard to get that under one umbrella, and it requires a lot of expertise. So really, you got to put together a management team that can operate well together, get economies of scale, and still, again, the taxes are really tough from a state and federal perspective. So you have to optimize margins wherever you can in order to pay those taxes to ensure that you have the cash flow and you're a good steward of capital. I think that is, for me, as that we talk to investors, is we back teams that I have utmost respect for, have done it in other industries, and are coming in that I think those assets that they were going to invest in would do better under their leadership. To throw additional money at potential operators that weren't good stewards or haven't made the transition. I love to hear how Tiffany thinks about that, as if they haven't performed, how she thinks about investing in those companies.
Yeah.
Very good.
I think the companies that have been the most successful, I mean, just talking on the public realm at this point, if you look at some of the larger MSOs that went, a mile wide and an inch deep, those are the ones now, struggling and in the distressed situation where they're trying to sell off distressed assets to gain capital to survive. I think if you look at somebody like a Trulieve who's gone, an inch wide and a mile deep into someone like the state of Florida, they own the market, they're profitable, they're doing well, their stock price is great, they're making money. I think based on what Hershel said, where you have to be kind of an expertise in ag and retail and manufacturing and all sorts of different verticals that other industries don't have. And then you take that and move it into different states that have different laws and different access points. You're talking about trying to put together a management team that it's almost impossible to put together. So I think the people that have been the most successful so far are the people that are kind of owning the markets in which they're in and not spreading themselves too thin across state lines.
I couldn't agree more. And it gets to the point that this is in many ways a macro level conversation, but obviously responsible investments into this distressed industry requires a micro level analysis and understanding on a company by company basis where that company's at and exactly what it'll take to get to profitability or to enhance profitability. So even though larger opportunities or a larger volume of opportunities will likely show up later on in the year, there are some opportunities that aren't going to make it that far without a plug of money, but they're wonderfully shiny objects otherwise. And so it really requires understanding the industry, understanding the operational teams in place or the operational teams that could be put in place to turn things around. So that's a great point. Okay, so Hershel, I'm going to come back to you now, but again, this is open for the panel. In terms of entering the distressed space, speaking now to our investors, are purchasers of distressed assets more inclined to purchase individual assets of distressed cannabis companies or the companies themselves holistically?
That's a really good question. It really depends on who we're talking to. there's some companies have gone into different states in just on the cultivation side and are moving up the or downstream to manufacturing and retail, and there's others that don't have any footprint or any activity in the state and looking to get in. So it really depends on the investor. I could say from if we just look at cultivation and we think there's potentially federal legality coming down the road, really local cultivation will be, in my view, predominantly indoor. And then to the extent we're going to manufacture the oils or edibles or other applications, I think outdoor is going to be the most relevant cultivation, and that's going to potentially move to the Northwest, California, which are premium growing regions. So once we get interstate, the concern is investing in cultivation may be a little bit more risky in each of these jurisdictions because once you have interstate commerce and federal legality, you can't restrict potential. You can make it difficult, but it's a little bit harder to restrict assets coming in or product coming in, I should say. So, I would say that on the value chain is an area that investors that we see are a little bit concerned on, and they still see the choke point in order to get product to the customer at the dispensary side. So we see a lot of people coming in on the dispensary, but it's really hard on that side to just operate dispensaries because you're looking at 70 to 80% effective tax rates because you get essentially tax on gross profit and you're not able to deduct rent, interest, marketing, a lot of expenses. So it's challenging just to come in there, and we've seen people just buy manufacturing assets just so they can get some 280E relief. So it really depends. I would go back to the fact that to the extent I'm going to buy any assets, I want operators that have, and there are now today, proven operators in the industry that have operated across the supply chain to make sure that you have those individuals in place and ready to execute once you make those investments because, generally speaking, I mean, there's always outliers. But generally speaking, the people who were in place before didn't execute on their plan, and that's potentially why they're in this situation. And there's all different reasons, but there may be a necessity to change out management, put people in that you feel are going to execute at a more higher level. So that's generally how I think about it: management, how we go out and speak to folks.
Thank you, Hershel. Right. I'd like to hone in a bit more on the types of distressed assets that might be most appealing to investors watching today. So you spoke a bit about that, obviously, with components of the vertical and so forth. But digging further within perhaps each level of the vertical, the IP assets, the technology assets, the brand assets, the cannabis licenses themselves, the machinery. What assets are most appealing among those, if any? And perhaps your notion is that you shouldn't be looking at that level. You should just purchase the whole floor of the vertical. But I'm going to ask the question anyway. If you feel that it does make sense to distinguish between various assets within a component of the vertical, which assets are most appealing?
Yeah, I mean, my view, dispensary continues to be the choke point. If you do retail really well, that is a place you get outsized return. I think most markets, it's you're looking at $1,000 plus per square foot, which is at the high end of retail. You got to struggle with 280E, so you may need some manufacturing as well in order to alleviate some of that. Related to brands, look, I think brands are super important down the road. Unfortunately, we haven't seen, in my view, a lot of brand loyalty and a lot of ability to port brands into new states. For one, brand loyalty, I don't know if the consumer potentially associates as much with the brand or potentially more commoditized and think about how much they're getting per dollar and what's the potential cheapest edible or something that they feel is value. Because we've seen brands come into California from Oregon and do very, very well and displace brands that we thought had some sort of had a moat around them. So I do get concerned about brand value and the ability to bring brands into other states, given that we don't have interstate commerce. So you're talking about either outsourcing, manufacturing, cultivation, and then having a sales force in those states, and you have to have QC controls. To the extent you're not controlling the supply chain, as I mentioned, I think the supply chain is not super dependable in many states, and to the extent that the supply chain gets tight, as we are now, we're seeing guys who don't have control of the supply chain potentially not be able to get biomass in order to even put on the shelves. So they're at a disadvantage when they go into these states, and to the extent you're not on the shelves, you lose relevance, and as I mentioned, it's, the consumer's going to go somewhere else for that product. So it makes it challenging to be a brand without the vertical integration. So it's hard for me to put a lot of value on brands themselves. And licenses, really, and I'd love to get Tiffany's take on licenses, given, we've heard a lot about limited license states versus more mature markets like a Colorado or an Oregon. Limited license states are great, but, as the states need more tax dollars, how long are they going to be able to maintain limited licenses, and are they just going to start getting more stores out so they can get the consumers through, get some more tax revenue and so forth. So I don't know how long that's going to last in those states. So it's hard for me to put very high values on licenses. And a great example is Florida. Florida, beginning of the year, licenses, just a piece of paper was going for $50 to $60 million. And today I can get a whole operation with a grow and some dispensaries and manufacturing for 20 to 30 million. So it's hard for me to, put a lot of value on licenses today unless you have a very clear plan on executing on those licenses and have some differentiation. So love to hear Tiffany's take, because I'm sure she's going through this with all of her portfolio companies.
Well, totally agree with Hershel. Like he said, the Florida market, the piece of paper was 50, today it's 25, and that's only a few months of a difference. And that's great for, the limited license states. But if you're talking about something like a California, where we're seeing most of the distressed assets at this point, licenses are just not that valuable without the vertical integration. So the problem with it is each jurisdiction has their own laws surrounding how you're able to operate, how you're able to transfer licenses, how you're able to open dispensaries. The city of California has the city of San Francisco has extremely difficult and nuanced laws surrounding licenses and transfers. One has to be open to do certain things. If they haven't opened the dispensary, it's a different set of laws. And that's just one city in a large state. So it is very difficult to value licenses. It's very difficult to value brands, like Hershel said, because the next cheapest brand that comes out, people move towards. So without a national ability to cross state lines and really build brands, it's very difficult to value brands as well. So I think without the vertical integration aspect of it, and that's where we would be looking to combine and merge entities that can control the whole aspect of the value chain. You have some companies that were doing perfectly great when oil was cheap, and they buy oil, and now they're all of a sudden losing money if oil goes up or distillate goes up or down. So you're a lot of times not reliant on you don't control your own destiny. You're not reliant on your own ability to do anything if you're not vertically integrated. And I think that, this is part of Hershel's world, is trying to convince some of the clients that he deals with, that this is going to be an issue. If they want to survive long term, they're going to have to, understand realistic valuations for their company. And if they're only in one sector of that value chain, that they probably need to merge and combine with other companies so that they are vertically integrated and they can scale quickly with those combinations and survive during this time.
Yeah, we look at it as a puzzle, trying to put people that been in just in dispensaries or just in distribution or just in manufacturing or cultivation and kind of put them together. But, you know, having realistic valuations is cumbersome, and then having a overlay of management can be cumbersome because, again, you know, it's hard to get entrepreneurs in a room and then try to all of them figure out who's going to lead the boat going forward and their destiny. So, you know, nobody likes to take the reins, and one of the reasons we find some difficulties, amongst other things, in the SPAC universe that has a lot of capital out there, but it's really challenging to deploy because you're trying to piece together this puzzle and all the relative valuations and all the personalities at the same time as trying to get out into the capital markets with a cohesive story. So, you know, that's just the reality we're in, but again, you know, as far as being an investor, you know, I think it's a really good time to get in. I think you just have to be mindful of who who's going to operate the assets going forward and who's going to execute on this plan. And to the extent they have a track record historically in this industry or another industry, and they can bring that discipline, you know, I think that's very compelling story to investors. So that's my take.
Okay, I'd love to ask more questions. Do I have time for another question? So I'm gonna go ahead and take the liberty of asking
one quick one. Yep, go ahead.
To Tiffany. Tiffany, I do want to hear on the brand note, and one of the questions that I've been looking for your answer to. Can you provide some examples of the cannabis companies that have been most successful at turning a brand around? And of course, what I'd appreciate, and I think the audience would appreciate, are for those who have been successful, why were they successful? What are the things that they did to turn that brand around?
So I don't think we're far enough down in the branding for a true brand turnaround, but I can tell you the brands that I've seen successful in the space are those brands that take advantage of a situation in which not everybody's going after. So there's a couple of examples of that. You know, beginning of 2019 or end of 2019, everybody was doing high-end craft flower, and that was the buzzword that we had the high-end craft. And here comes Old Pal into the market with, we're just going to do the cheapest weed we can do. Nobody was talking about cheap weed. So Old Pal came in and all of a sudden destroyed the market from a cheap weed perspective. So it was kind of the contrarian view. You know, you have these high-end gummies and chocolates coming into the space that everybody was talking about. And then, you know, here comes Thunderstorm with their Kana Nano, their quick-acting edible that nobody else had at the time, and their sales exploded. So they just did something different. And those are the, two of the brands that I see that have been, successful in the space to date. And they're basically, it's taking the contrarian view to what the populace is doing at that time, and not necessarily the populace from the consumer, what the consumer's buying, but what the industry is doing at the time. So those, I think you have to have a very, very differentiated product from a brand perspective, and then your brand gets into the consumer's hands and people understand what that brand means. And then you can build on that brand from there.
Thank you, Tiffany. And I think that that's all the time that we have. So I'd like to thank our panelists, Tiffany Liff and Hershel Gerson. Thank you so much for your time today and for your fabulous insight.
Great. Thank you so much, Tom, for leading the discussion there. Tiffany and
Thank you for
Hershel,
having
great
me.
insights. We're not quite done yet because we do want to pull at least one, maybe two audience questions. Hello, everybody. This is Lewis with the Arcview Group. Unfortunately, we had over 30 questions, and there's more than 300 of you on the call, so we won't be able to get to everybody. But I have been paying attention to the Q&A box, and I think I pulled an interesting one or two here. So let's talk about the medical cannabis sector and hemp and CBD. A lot of the discussion here has been around the THC side, particularly around the adult use or recreational side of it. I'm wondering if you have differing opinions, and this is for all of the panelists here, including you, Tom. if you have different opinions about how these two markets track, do they track the same ups and downs of the adult use THC side of things? Do you see that these two categories will continue to split off more than they've already done already, and command their own valuation multiples and have their own financing ups and downs? Do you have any thoughts about that? Hershel, why don't we start with you, then Tiffany, then Tom.
Yeah, so we have to be clear about medical, whether or not it's medical only states or adult use states that have medical. So there's a difference. Medical, like there's states that just have broad medical programs, Oklahoma, Montana, and a variety of them, New York, New Jersey. So those states that are just medical, we're all looking to get in as long as they have high populations. New Jersey, New York, I think both Tiffany and I are super attractive. We expect them to go recreational. So the play there to invest is to get a footprint, a foothold, I should say, in those states, and then hope when it transitions to recreation or adult use, that those who have a significant footprint get to transition immediately to recreational. Now, some states haven't been that clean. So if we look at Michigan, they had a caregivers program and it wasn't a great transition, but that's generally how we look at medicinal states, at least from my perspective. Now, if we look at adult use states that have medical, like a Colorado, even in California, medical is still an area that locals generally will buy their products because they don't have to pay sales tax. So they get a benefit related to sales tax, and they can buy a larger quantity. So definitely, if you have cancer or you're using a significant amount of product related to some sort of condition, now you can get medical prescription for everything from to anxiety. Definitely in states where there's medical and recreational. In some states that have medical programs, it's a little bit more narrow as to what you can use cannabis or is allowed to use cannabis. But generally in Colorado, if we look there, sales are down overall in the last months of May, some recent data, and some of that's because they generally have a lot of transients and a lot of tourists that come into the state, especially in the mountain region, and skiing. And skiing has been nobody's really participating. The mountains are closed, but the medical market has been increasing, meaning there's more locals, more consumers participating. So I think it's a very stable area, and I think it's still viable even in recreational, given that the attributes of sales tax aren't there, and you can buy larger quantities. It's just a different bifurcation of the consumer. And then I don't know if you think of that way. I'm going to defer CBD and hemp. That's a whole different regimen for now, and we can get a whole discussion what's going on in that market. That could be a webinar next week or next month. We could talk about where hemp is and the related bankruptcies, but I don't know if I really want to get into that market right now. Tiffany?
Yeah, so regarding the medical side, I think there's two benefits to medical states, adult use only medical states, such as Florida, New York, New Jersey. First of all, they have large populations. But secondly, the two biggest things to me are, one, there's no taxes. So you escape the tax situation from a consumer perspective. And then secondly, they tend to be statewide laws that govern. So such as California, where it's city by city, county by county, jurisdiction by jurisdiction, things can change, laws can change. You don't know what tax you're paying here or there or other places. In the state of Florida, for instance, it's one law, it's one, legalization to deal with, one entity to deal with, the city of Tallahassee. They give all the cannabis laws, and that's it. So it's a lot easier to navigate a medical only state, particularly those that have broad medical capabilities, such as Florida, New York, New Jersey. When some of these states first started, you had to have real issues. You had to have cancer, you had to have, very medically documented issues. In the state of Florida, you can have anything now, back pain, anxiety, multiple doctors write for the scripts, and it's fairly easily accessible. So the state of Florida right now is very interesting because we do expect it to go recreational in 2 years from now. And those that have the stronghold here are in the position to go ahead and pivot into that recreation side. And New York and New Jersey similarly. And also, I'm with Hershel on the CBD and the hemp side. We're not hemp and CBD investors, so you know, I'm not as much of an expert on speaking to that market as much as THC.
Okay, we'll skip that for now. Tom, any thoughts about the medical cannabis market or hemp even?
Yeah, so one of the things to note here is that the cannabis subject matter is so broad, right? And as opposed to the pharmaceutical industry, as an example, where you've really got one category of product, it's a drug. It requires drug level FDA approval, $1 billion, 10 years, and so forth. You've got the alcohol industry, and it's really one type of product. And in focusing first on the adult and medicinal, the THC market, you've got several different categories of industry going on here, and the complexity is wonderful. So as an example, Codie spoke earlier, Tiffany spoke earlier of the commodity play, right? Which is the cheap weed, which is Old Pal. And those guys did an amazing job. And we're going to see that, of course. And I think we're also going to have, from there, brand plays are going to grow, right? And increasingly, I think you'll have an experience that's something like wine in some respects, right? Where you have particular weed grown in a particular area of the country with a particular grower involved. And all of a sudden, there's somebody that gets the branding play right, and there are folks that are doing that now, including some of our clients, and that'll be exciting. You also have experience plays, right? Because one thing that's so interesting about the cannabis market is we do have verticals. We have dispensaries, we have grows underneath that. Above that, we have manufacturing and distribution, and all of these are part of our cannabis industry. So ultimately, at some point, somebody's going to get the experience play, right? And there are some companies that seem like they're taking a good hard swing at a good pitch there. So as examples, outside of that, you have coffee shops, right? My favorite is Coffee Bean. And when you walk into a Coffee Bean, it's not just, it's not that I'm excited about paying $3 or $4 for a large cup of iced tea that I could have made at home. It's the experience. Or if you're having a coffee, it smells like coffee, and it's part of your day. It's part of your routine, and they nail the experience. And that's a branding play underneath the experiential category of the industry. Apple stores are a good example. Somebody's going to control that end-to-end user experience with such precision, from the dispensary, the grow, the manufacturing, even probably the distribution to some extent, until an Amazon rises up in the industry. So that's a whole different sort of play that's going to take place as well. Then you have a technology portion of the industry, and that's a whole different conversation, which is going to be supported by patents, and it's going to be filled out by patent litigation and determining who the winners are and who the losers are. But there's so much technology inside this plant. We're just discovering the tip of the iceberg here. Most of the technology is still lying beneath the surface. And so when that comes out, we're going to have real effects on human physiology as a function of technology precision relating to the plant. So there's so much complexity, and it's wonderful. And there are so many different categories within the THC medicinal market. So that's a big answer, and that's just cutting the surface of it. As far as hemp and not just CBD, but other cannabinoids that aren't THC, that aren't on Schedule 1 of the Controlled Substances Act, that is a different conversation now because, you're looking at marketing restrictions lifted to a large extent, right? You can have national conversations on the hemp topic, on the CBD topic. You can also, you can be more aggressive in terms of reaching out to various aspects of the populace, because there's less of a restriction there. There's less of a taint, so to speak. There's less of a history associated with hemp, with CBD, as there is with THC. So for instance, you might speak to my mom out there in Blandon, Pennsylvania, and she might be receptive to that sort of conversation. And that's a whole different industry. But again, underneath that, you also have the same sorts of plays going on. You have commodity plays where you're going to ultimately, the hemp that's going to get put into hamburgers that got to stay under $1 per hamburger, that's not going to come from California. That's going to come from Colombia. It's going to come from Mexico, or it's going to come from Cambodia or Thailand or some other aspect of the world, or maybe the Midwest. You're also going to have brand plays there as well. But furthermore, you're going to have technology plays, because the technology inside the plant, it's much bigger than THC. And that is just getting discovered now. So So again, it's awfully, on the surface of things, it's complicated, but it's really not, because we have models outside of the cannabis industry. And one of the things that Zubalol is so excited about is working with Fortune companies and working so long in cannabis. We're excited to sort of learn the lessons and apply the lessons in the Fortune world to the cannabis industry, the hemp and the adult level and the medicinal level in between.
Well, thank you so much, Tom. Great insights there. But thank you again, Tom, Tiffany, and Hershel, for lending your expertise today. I think our audience learned a lot, and I even learned a thing or two. But thank you so much. It was great having you on the call. And now, before we break today, it's my pleasure to introduce the next portion of our call, and that's Jake's Sponsor Corner. Here to lead that off is no other than Jake Huzaruk, our VP of Business Development here, and he'll be speaking with Bill Neville to talk about the Entrust Group. So Jake and Bill, over to you.
Thanks, Louis. And Bill, of course, thank you for joining us today. Thank you for sponsoring today. I'm excited to learn a little bit more about the Entrust Group, and I think everyone on the call is as well. So start at square one. Tell me about the Entrust Group. What do you do? How are you unique? And who is a fit for your services?
Yeah, thanks, Jake, for having us. So we are we're a custodian and record keeper of what are called self-directed retirement accounts. And what makes us unique is that not many retirement account custodians, your Merrill Lynch's, Charles Schwab's, Fidelity's of the world, are willing to operate true self-directed retirement accounts, and which are accounts that are able to hold non-traditional assets, like a cannabis, like a private company in cannabis would be considered a non-traditional asset. So really, who our sort of target audience is and who's the best fit for our service is people who are interested in investing in non-traditional assets inside their retirement account. Instead of being limited to just publicly traded stock, bonds, and mutual funds, they want to invest in something outside that limited, narrow scope of investment opportunities.
All right. Well, what are self-directed retirement accounts, and how are they different from typical retirement accounts, which we're all familiar with?
Well, the accounts themselves aren't any different. It's more about the custodian that you have the account with. So when somebody opens an account with us, it's still going to be either a traditional IRA or a Roth or a SEP or a 401k. The account itself is exactly the same. The difference is we're a self-directed custodian, which means that we don't advise our clients, we don't sell any investments, we don't promote or endorse any particular investment. And if someone wants to invest in a non-traditional asset, which again is anything other than a publicly traded stock, bond, or mutual fund, we will provide all the custodial and record keeping services. So they can establish a traditional IRA with us or a Roth IRA and then instruct us to invest in a private company or to buy an investment property or to invest in precious metals or something that isn't just limited to publicly traded stocks, bonds, and mutual funds.
Sure. Well, that kind of begs the question is, what's the most unique opportunity you've seen someone use this for if it's used for non-traditional?
Yeah, I get that question a lot. I mean, we had somebody invest in a racehorse one time inside the retirement account. We had people invest in cattle, in a bowling alley, in an airplane. I don't know that anybody did this with Entrust, but I know of stories of somebody buying bull semen as an asset. It's an asset, right? That is considered, and these are all considered assets that, as long as they're used for investment purposes only, are allowed to be held. The IRS says you can make that investment inside your retirement account as long as the custodian that you have the account with is willing to hold that asset.
Wow, bull semen, 2 words I never thought I'd hear at Arcview.
Yeah.
Well, why can't, this is a follow-up question here, but why can't the banks and brokerage firms hold those assets? Why do we need a company like Entrust to hold a retirement account?
It's not that they can't, it's that they choose not to. Their business model is around advising you and then selling you from their suite of funds, and then they charge a commission, they earn, and it's just how their business model is. There is nothing preventing Merrill Lynch or Charles Schwab or somebody like that from holding an investment in a startup cannabis company or a piece of real estate or a horse like we did, a racehorse, right? They're allowed, they choose not to. Whereas in our case, and we've been doing this for almost 40 years, we elect specifically to be a custodian that holds non-traditional asset. As long as it's not specifically prohibited by the Internal Revenue Code, we will, and there are certain rules around that we don't have time to get into, but as long as you're not engaging in what's called self-dealing, you're allowed to invest in almost anything you want inside your retirement account. As long as it doesn't violate, the IRS rules, we will process and hold that investment.
40 years. Wow. What are Entrust's main goals, and how can you add value for our network?
Yeah, I mean, the whole reason that we are sponsoring this and trying to get the word out is that not a lot of people know about this. Like the general population, even though you've always been allowed to do it, a lot of I guess real estate investors is a good example, are aware that you can invest in real estate inside your retirement account. But in the cannabis space specifically, because it's such a, I mean, the legality of it is becoming more and more, it's becoming more and more legal. More and more people are becoming interested in investing in it. And not many of these people know that this is an asset that you're allowed to hold inside the retirement account. These are typically privately held companies. And simply the IRS allows you to invest inside privately held companies inside your retirement account, as long as you have it with the custodian like Entrust. So our goal is we're trying to spread the word. We're trying to get the word out both to the companies who are looking to raise capital to say, look, if you are out there trying to raise capital and you have people in your network, if you have friends or family or anybody like that who might want to invest with you, but don't think that they have the money, then they may have it in like an old 401k or an IRA that they might be wanting to invest, and they're not having to withdraw. It's not a taxable event. The asset is purchased and held inside the retirement account. So it's a tax sheltered investment that they're holding inside the retirement account. So the companies who are looking to raise capital, it's like, hey, did you know that this is a thing? You might have people in your network who want to invest with you that don't think they have the money because they don't have it in their personal savings. They might have it in their retirement account. They don't have to take the tax hit. They can do the investment inside the retirement account. And for you investors out there, if you see some investment that you want to make and maybe they're looking for at least a certain dollar amount and you don't have it all in your savings account, here's another access where, again, you don't have to withdraw it. You don't have to take the tax hit. You simply have to move it to a custodian like Entrust, and then you can process it as an investment inside your retirement account. And I will point out, we are virtually the only retirement account custodian record keeper who is willing to hold cannabis-related investments. We have been getting calls from people who will call other self-directed custodians. We have competitors who will call them up and say, hey, I've got this investment, but it's a cannabis fund or it's a cannabis company. And they're all getting turned away. Their regulators or their compliance departments are not willing to hold it because it's not federally legal. We've been doing this now. We've been holding cannabis-related investments because from our standpoint, it's simply a private placement. It's a private company or it's a private fund. In terms of like what ultimately the company is doing inside that, the IRS says you can invest in private companies. And as long as it's not, the transaction's not prohibited by the IRS, we will process and hold that investment.
Wow, that's fascinating. I mean, this is, I think these webinars are a course for education, and I find myself learning new stuff, even in Jake's Sponsor Corner. Well, thank you. And for those listening today, what is the best way to get in touch with you? And can you tell me more about this offer you're running?
Yeah, yep. So, I mean, you can reach out to me. My email is my first initial and my last name. So bneville@theentrustgroup.com. We have a website, which is www.theentrustgroup.com. And my phone number, if you want it, is 510-587-0950. That's our company number. Then my extension is 237. And in effect, if anybody who wants to open an account and is watching this or like pass it on to other people, we have an account establishment fee of $50. It's $50 to open an account with us. We'll waive that fee for anybody who wants to open an account who's watching this. And simply if you go to open the account online, which is the quickest way to do it, you simply have to enter in the promotion code, which is my initials, BN, and then the number 50. So BN50, make sure the B and the N are capitalized. And we waive the $50 new account establishment fee when you do that. Or if you contact me or email me or call me, just remind me that you saw me on Arcview. And if you can also open an account using paper applications, we'll waive the fee. Just remind me, or again, I'll remind you what the code is.
Excellent. Well, that brings us to the end. And just as a recap, b.neville@theentrustgroup.com. Is that right?
Not B. Neville, just B. Neville.
Oh, no, I'm so sorry. Neville at theinterestgroup.com.
There you go.
At theinterestgroup.com. And of course, that's $50. That's saving your establishment fee with the code BN50. Capital B, capital N. Don't screw that up. Well, the way I screwed it up. Thanks, Bill. I really appreciate your time today. And now just to wrap up for the rest of the day, we're going to close things out. I'm the one closing out today, it appears. So please, for those Arcview group members on the call, join us in the after party immediately following this webinar. You received an email to register yesterday, probably. So jump off and then get onto that link, and there is another link provided upon registration. I got a special announcement. We actually have another webinar coming up, another Arcview Access Elite. That is one of our pitch events. One of our, we have another roster of great companies getting ready to showcase. That is Wednesday, June 24th at the same time, 1 p.m. PST. We'll be coming back to you. And this is for Arcview members and their invited guests, in case you're fortunate enough to know someone who's part of this organization. And we're going to hear from several companies as well as our partners at the Arcview Collective Fund. So Gene Sullivan and Jeff Finkel will be on for this one too. You don't want to miss it. The next Arcview Access is going to be live July 1st, discussing the topic of food and beverage, one of my favorite topics that we do not talk about nearly enough. Stay tuned. We've got Jeremy Marshall from Lagunitas on for it. We got Christy of Kiva. We have Carolyn. We have an amazing moderator that has been an analyst in food and beverage for decades. So this is, needless to say, one you do not want to miss. A webinar survey popped up while we're talking today. Really like to hear your thoughts, of course, on how this has progressed and any other topics you want to hear us discuss. And then to close things out, we have relaunched the Women Investor Network for Arcview members and their guests. Contact our sales team to learn a little bit more about these monthly virtual meetings. sales@arcviewgroup.com, super easy. Mark your calendars. Stay tuned for that next WIN event. It's going to be July 6th. You can visit arcviewaccess.com to get a replay of this very episode. Within 72 hours, we'll have the whole thing up. Always head to Arcview Access to review any of our past webinars. I always watch the Isaiah Thomas one over and over. Go Hoosiers. You can now join the Arcview LinkedIn Lounge, where our community stays connected, shares insights, and shares info. What's top of mind for this community. So head over to LinkedIn, get approved, and join the conversation. And of course, I would be remiss if I did not mention the 8th edition of the State of Legal Cannabis Markets. Arcview does produce the #1 cited industry-leading research reports with our partners over at BDSA, formerly known as BDS Analytics. So please head over, check out what we have going on in the lounge, check out what we have going on in the next couple of weeks. But if you need to bone up on some research, grab that 8th edition of the State of Legal Cannabis Markets. You can find more again at arcviewaccess.com. So once again, sales@arcviewgroup.com, arcviewaccess.com. Find any of us on LinkedIn. We're very responsive. And of course, thank you for joining us today. I hope to see you here next week. Have a good one.